this with Mark Wiseman. He's former chair of AIMCo, former CEO of the Canada Pension Plan Investment Board, and regularly joins us to talk about some of these macro issues. Mark, it's nice to see you.
Good morning. Good to see you.
So obviously this is going to get a lot of conversation this week. Where have you landed on this conversation?
Well, look, in terms of the capital gains tax, I think the horse has kind of left the barn. But the one thing that I want to raise is how it is being implemented. So this is what really bothers me about the tax, and I don't think we've talked enough about it, which is how it is being implemented. And let me explain to you what I mean. One can believe, I happen not to agree with it, but one could believe that capital gains should be taxed the same as regular income. If you believe that, and if you were principled about it, the government, when they announced the budget, should have made the change to the capital gains inclusion rate immediately. Why have they delayed? Why have they delayed the implementation? Why have they waited until the end of June before the implementation? The reason is, and they actually say it if you read the fine print in the budget, is to encourage people to realize capital gains now, before the implementation on the 24th of June, at the lower rate. And by doing so, what they're doing is bringing government revenue forward from future years. And this, to me, is the Ponzi scheme that is being put in place with this capital gains tax. In other words, what we are doing and what the government is doing is stealing revenue, tax revenue, from future governments in order to bring it into the fiscal 25 year. And they say that. They say it's $7.5 billion that they're bringing forward. If they were principled about it, if there was a principle behind this change, they would have implemented it immediately. Instead, it's simply a way to bring money forward for the government in this fiscal year to keep the deficit at only $40 billion.
And what do you think the long-term ramifications of something like that are, outside of just bringing forward tax revenue?
Well, you're going to make it more difficult. There's going to be less revenue for future governments, again, because people are going to sell and be encouraged to sell their capital anywhere where they have a capital gain prior to the new rate coming into effect. And then the other implication is the one that we've talked about, and it is about a tax on innovation, a tax on spending, a tax on productivity gain. I happen to believe that this will have an impact in terms of capital spending in the country. Why spend here? We're in a competitive environment for capital. Why, if I was a business, would I spend in Canada when I can spend in another country, whether it be in Europe with lower rates or in the United States with lower rates? But to me, even leaving that aside, the implementation of this is disingenuous.
And you think if they had implemented it right away, I mean, wouldn't that have still forced some people to think about, making changes, or actually
no,
would they would have put them
John,
off?
if you implement it right away, then there's no incentive to sell early and to bring that revenue forward.
Right.
So to me, and they say it in the budget. They say it in the budget. They claim that that's going to bring forward $7.5 billion in revenues. I suspect that number is even higher.
And does that? I mean, it almost sounds like you're saying this is a political choice as opposed to an economic choice.
No, it's a revenue choice for the government. It was a political choice in and of itself, and you were principled about it. You would have made the implementation effective as of the budget date.
You started the conversation by saying it is not your view that treating capital gains the way we treat, one's income on a taxation level, that they should be treated equally. What is as someone who's sort of watched this stuff unfold for years, what's your view?
Yeah, well, look, I two things. I think it's very simple. The first is, do we believe from a policy perspective that we should be incenting individuals and businesses to spend money on capital assets, on investments that will help produce greater economic growth in the long term? So that's the first. And I think that's an important argument for the economy overall. And then the second point is, you're in a competitive world, right? People have choices in terms of where they invest, particularly businesses. Individuals have choices in terms of where they want to be resident. And I think Canada has to be competitive on the global stage. So those are the two reasons.
So when the finance minister talks about this impacting a small group of Canadians, you're saying the risk is that that small group of Canadians who actually play a role in creating a lot of wealth for the country could look to put their capital elsewhere.
Correct. And it's not about the number of Canadians that are impacted. It's about the number of dollars at work in the economy that are impacted. And that turns out that that's a lot of dollars in this economy, an economy that is already suffering from sluggish productivity growth. We're at a 27% productivity deficit to the United States. And why would we put more sand in the gears of the Canadian economy, which is already suffering from a lot of effects of things like interprovincial trade barriers and a lack of competition.
Speaking of being inside the country, we're having a robust conversation around this inside the country. You travel to a lot of places around the world when it comes to new capital coming to Canada, because there's this, you just said it, like there's the people can put their money anywhere. Has there been a reaction in private circles that maybe they would think twice about doing something because of a change like this? Or
look, John, I think people fundamentally want to invest in Canada. People like Canada, they like our rule of law, they like the fact that we're part of the North American environment, that we're part of the USMCA. They like the fact that Canadians are generally hardworking and want to get ahead. This is a safe place in a very complicated and dangerous world today to invest. But when you peel back that onion, when you're talking to people internationally and they talk about the barriers of investing in Canada, how difficult it is regulatorily, how the tax system is making it harder, how the tax system is unpredictable and uncompetitive, all of those things make it much more difficult for people that otherwise want to invest capital in this country to actually invest capital. We've got to make it easy, not harder, for capital to come to Canada.
Well,